Welcome to NCB Market Minute by Matthews Carter Boyce. We're going to look today at current U.S. economic conditions and the outlook for the remainder of 2022. U.S. gross domestic product, after suffering the worst downturn since the Great Depression, recovered sharply in the summer of 2020. And what we have seen now is that while growth has somewhat slowed a little bit in the third quarter, if you look to the right of that chart, we are still recovering and indeed have recovered past the level that we started at before the pandemic effects happened. However, we're still below what our trend line would have been otherwise. So in that sense, we are still recovering. Corporate earnings look fantastic through the third quarter of this year. Stocks were really on a roll throughout most of 2021, though they did lose some steam at the end of the year, and we've seen volatility in the first part of 2022. The question is, will we be able to sustain this growth moving into 2022 in spite of some headwinds, including inflation that of course takes away from real GDP growth and labor force constraints. Unemployment rates in the nation have now fallen below 3%, but some of that is actually because participation rates are still about 160 basis points below pre-pandemic levels. We created about 6.4 million jobs year over year by the end of 2021, but that is still almost 3.6 million jobs below what we were before the pandemic started. As many of you know in your own businesses, finding labor is a real challenge. Retaining labor is a real challenge because of still the lingering effects of the pandemic and what we've now come to call the Great Resignation. Inflation, of course, has become the story of 2021 and indeed will dominate the economic and political headlines of 2022. What we see in this chart shows a divergence between the consumer price index in the lighter color green line versus the producer price index. As you notice, that divergence in those lines showing that producer prices are rising more quickly than what we are seeing in our retail stores and grocery stores. This suggests that inflation is likely to remain elevated well into 2022 and will likely persist throughout the year at some level. And indeed, we are seeing other indications that these costs are rising. Recent data just released by the Commerce Department tells us that manufacturing prices were rising rapidly at the end of the year, and that portends to higher prices throughout the supply chain and into the value chains that we see as we purchase goods and services. The one thing that we can say is that if we still see inflation rates running above 4 to 4.5% by summertime, Democrats are going to have a really difficult time explaining their economic agenda to voters this November. So the bottom line that we're looking at for this year is that we expect the Fed will increase rates by 25 basis points at least 3 times, maybe 4, but we'll stick with 3 for now. We do think inflation is going to stay elevated at 4%. Stock markets will certainly continue to be volatile as we've seen in the early part of 2022, but will be up for the year. And by the end of the year, real growth will be at about 3.8%. The biggest constraints on the economy remain available workers. Companies can't grow, can't sell more if they can't provide the service or the products because they don't have staff. And of course, how the market and we as consumers respond to rising interest rates as the Fed both increases the base rates paid on loans as well as pulling back on asset purchasing programs, which will start to affect mortgage rates and other elements of our financial life. Thank you for stopping by today. Look for other upcoming webinars on the MCB website, and also look for more Market Minute videos to come. Have a great day.